Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. Last week, I was actually so overrun with stuff to do, I didn't do last week's review. My apologies, I was totally mobbed with doing like outdoor events and blah blah blah. I just got back from doing an active volcano, Mount Rinjani, on the island of Lombok. It's my third time doing it this year. I'm doing it again next month. Last month I was doing it with Ollie Ollerton, Jimmy Narain, and like a bunch of other really cool people. Mitch Hutchcraft, the guy who just done the longest triathlon to Mount Everest. So he's an ex-Royal Marine. He swam from England to France, cycled from France to India, ran from India to Nepal, and then fucking climbed Mount Everest. Absolutely insane. So he came on my trip a couple of weeks ago, and I'm doing it again next month. So I've just been super mobbed. I honestly never realised how much work, time, and effort goes in to putting together expeditions. It's fucking crazy, guys. Which is why I am glad I do swing trades on the weekly time frame. You know, you can enter it, you can just let it run for weeks, and you don't need to watch it every 2 fucking seconds. It ends up being brilliant for me. I haven't taken many trades since last year. I've taken a few. I haven't taken many. What I'm in right now, I believe I'm in USD CAD. Is it? I think it is. I think I'm in a buy right now. Yes, I am. I'm in a buy right now, USD CAD. So like my stop loss is around, it's below here. So it's about here. And my take profit is about here. Obviously, that's my automated take profit, right? Obviously, in my mind, I've got my kind of visual take profit here, but I look at where my take profit is in my mind, for example, here, and I then put it above because there's nothing worse than being here, getting stopped out in profit, and then it goes like that, bang, bang, and then what do you say to yourself? Fucking hell, I should have made it higher. So what I then do at this point is, you know, when the market does come up here, I then just simply move my stop loss up. Comes back, retests, rejects, and if it goes, then I make more. If it comes back down and stops me out, it doesn't matter. I've pretty much made roughly the same amount of money anyway, right? So that's how I manage it, okay? And I let runners, I give them the chance to run, all right? And that's basically how I do it, boys. In fact, I'll put that one back in. I'm just going to leave this now for weeks, you know, just going to leave it for weeks to run. So let's get cracking, guys. I'm going to go through the full process again today, right? I'm going to go through the normal stuff that we do, which is the Forex Factory stuff. Then I'm going to cover any potential trade setups that we have. Then, let me just get rid of this. Then I'm going to cover this. I'm going to cover, what do you call it? Prime market. Pardon me, prime market terminal. All right, we're going to have a look at that as well. And that's like, so this stuff here is like what the banks are in. So let me just show you something. Hold on. As you can see, I have zoomed in my screen. So hopefully everything looks massive here for you, right? Because a lot of people are like, oh, I can't see your screen. Let me just move this. Okay, USD CAD. I'll just show you briefly what I mean, and then we'll get cracking on, okay? So USD CAD. Come on. So COT, right, is commitment of traders. It's basically the banks. Are the banks mostly in sells? Are the banks mostly in buys or whatever? So we can see we're pretty much 50-50 here. Let's have a look at DMX. Dumb Money Index. So retailers have, look, retailers are in sales, right? Mostly, it's about 50-50, you know, it's 53-47. However, they are mostly in sales, right? So that's what you want. You want retailers to be mostly in sales and banks to be mostly in buys. But we need to check this here. Net position. Hold on. Long. That's USD. Long change is minus. So that's like a profit take. Short has increased. Short change spreading. So look, total positions. Net long, so it's still long, 35% short, okay, and that's just spreading it equally. Net 2.5, long 20 positions, 28 positions short. However, 35.8% are in longs. That's fine. It's still okay. We've managed our risk anyway. So what you may find is, well done. You get, look at this. It's beautiful. You might get a wick back, so it's going to go like this. Bish, bash, bosh. Liquidity grab. You might even get a little bit lower, and then boom, 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 away it goes. Right. So I'm just going to leave that for weeks. That might not play out. That might, I'm going to show you. Hold on. 1 week, 2 week, 3 week, 4 week, 5 week, 6 week, 7 week, 8 week, 9 week, 10 week, 11 week. You know what I mean? That can be the next 3 months that I'm going to be holding this trade. Okay. Just to give it a bit of insight. That doesn't look like it's far away. That what do you call it? The stop loss. However, if you look on the hourly time frames or the 30-minute time frames, it's gonna look as if it's fucking hundreds of years away. All right, it's just because that's the weekly time frame. It looks close, but it's not. It's not close at all. Okay, let's move on. So, for anyone who watches my videos, you will know. Grab yourself a notepad and pen, and you're going to write at the top. You can write currency streams, you can write economy streams, you can write trades, whatever you want. Today I've chosen to write currency streams. Then you're going to write 3 separate headings across the paper. The first one is strong, weak, and then neutral, right? And I know my videos, you're going to be like, fucking hell, every time I watch this guy's video, it says the same thing every week. Exactly. That's the fucking point, right? You need to make it a habit of doing this, and that once you get into that routine, it's the same protocol, the same routine, the same strategy, the same method, week after week after week, right? That's the whole fucking point. So it's going to be like this. Look, currency streams, strong, weak, neutral. For anyone that's watching my videos for the first time, the reason why we don't do strong, neutral, and weak, which would of course be logical, right? It's because what we do is once we write down a strong economy and a weak economy and a neutral economy, we don't care about the neutrals. We're going to cross them out and ignore them, and we then pair up a strong economy with a weak economy, and that is how you decide whether you're taking buys or whether you're taking sells on particular pairs. All right, that's how you decide. You don't decide to take a trade just because. Hold on. Look. Just because it's broken. Oh look, I'm taking sells now. It broke my fucking trend line. It's down below. I'm now going to take sells, because what will happen is it'll go like this, boom, boom. It'll hit this area of value, and then it'll just go fuck off, and then you'll be left there scratching your head like, that was sales. That was 100% sales. Why is that? Well, it's not sales, because drawing a line on your fucking page, yes, it helps with technical analysis. However, technical analysis just simply shows us potential areas of entry, right? It does not give us a reason why we're taking that trade as a buy or why we're taking it as a sell. You get the reason for taking a buy or a sell from fundamentals, right? So if US is strong, fucking employment's high, unemployment's low, credit card spending is high, average earnings is high. It's like, okay, the US is fucking strong. Then you look at Canada, oil's dog shit low, so Canada's weak. Unemployment's high, employment's low, credit card spending is low, average earnings have dropped. You're like, okay, Canada's fucking weak. So in USD CAD, you're going to be buying that currency pair. That's your reason to buy it. It's a solid, foundational, informative, data-driven reason to buy it, right? You're not buying it because you drew a fucking stupid line on your page. That's not the reason, right? Now, drawing stupid fucking lines on your page is very important. However, it's third in the line, right? It's third in the queue. It's technical analysis, which is not number one. It's very important, but it's not a reason to take the trade. It's a reason why you may enter this area or exit that area, okay? That's all. But in terms of deciding whether you're buying a pair or selling a pair, you don't do that using a fucking line on your page. You do it using cold, hard information. Okay, let's go. So, as we're here, you can see all of these. Now, for data during the week, right, I use this. It is trading economics. Now, it's exactly the same. Hold on, let me take out of this calendar. There we go. So it's exactly the same as Forex Factory, okay? However, it's 100 times better. There's 10 times more information on here. And if news comes in, like let's say there's news here at 2 p.m., right? If news comes in at 2 p.m., the numbers will instantly be up here at 2 p.m. But if you look at Forex Factory, it will still give you that kind of sign as if it's loading, and it takes ages, like 5-10 minutes. Sometimes it's quick, but in general, this is always really fast, and Forex Factory is really slow. And look, you might have 1, 2, 3 pieces of information here, but when you look on Forex Factory, there might only be one piece of information, right? So you get far more information on here than you do on Forex Factory. The reason why I don't use this to do my reviews is, look, if I want to select the countries, look at how I select them. Look, it's a massive pain in the arse, right? That's why I don't do it. But if I want to select the countries here on Forex Factory, it's very easy. It's very simple. So what I always do is, oh, China, sorry. I always do every single currency pair, every single economy on its own, except from AUD, China, and New Zealand, and that's because they're all very, very closely correlated, all right? And you don't get much news on each of them, so you only get like 1 or 2 bits of information on each. You don't get a lot, and that's why I do it. So what date are we on now? 28th, okay. Let's have a quick look at the previous week, because I missed last week as well. Bearish, so anything below 50 is bearish, anything above 50 is bullish, right? It's dead simple. You don't have to overcomplicate things. This, it's higher, bullish, 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 bearish, bearish. Remember, that's bearish, guys. Excuse me, my nose is bloody itchy. Don't get caught out with this being being green, right? It's green because look, it was forecast to come in at 5.1 and it came in better than forecast, so that's why it's green. However, if you look at the previous, it was 5.4, so it's decreased, right? The GDP has decreased, which is bearish. It's not bullish. So do not just look at something and see that it's green and think that it's bullish. And equally, don't look at something seeing that it's red and think that that means bearish, because it's not always the case, all right? Industrial production has increased. Retail sales year on year has decreased. So that's bearish, bullish, bearish, bearish, stagnant, neither bearish nor bullish. GDP has increased. NZD increased. Inflation expectations decreased. Employment change. So employment is up. Look, I mean, that's quite good, but look, it's massively, massively below the expectations. Unemployment rate has increased, so that's not good at all. So why do I look at all three of these together? Well, they're very closely correlated. If China's doing well, it means Australia will then do well, or at least it gives you an idea that Australia will potentially start doing well, right? Because fucking hell, my nose is so itchy, guys. Sorry. If China's doing well, then they have to increase manufacturing, increase production, right? In order to increase manufacturing and increase production, they need to buy more shit. I.e., they need to buy more iron, more copper, more silver, more gold, more, tin, more nickel, loads of other stuff like that. And they predominantly purchase that from Australia. They might have another couple of countries that they've got deals with, but it's like 80% comes from Australia. So if China increases, then Australia is going to feel the benefit of that, all right? If China decreases, then Australia is going to bear the brunt of that as well, okay? Because they'll start buying less, all right? So it's important to remember that, guys. NZD fuck, this was last week. Bearish, stagnant, no rate change. Trade balance trade balance has decreased, so that's not good. Flash manufacturing 51, that's increased, so it's increased again. It's about, so that's bullish. Anything above 50 is bullish. Okay, so that's pretty decent. And then let's see what we've got coming up this week. 31 December 2023. 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 31 December We've got CPI, Oz, potentially less, potentially the same, potentially the same. Retail sales up slightly, potentially. Imports, manufacturing. Okay, so we've got a lot of news this week that we potentially want to see, right? So let's have a look. I am going to place. Where is my. I'll whip out last week's as well because I've got it here. Yes, there we go. It's this one, isn't it? Yes, it is. So I'm still going to keep AUD at neutral. NZD, I'm going to keep it neutral. It's just not a particular. The things are looking well for it, and it's trying to creep back, but it's not a powerhouse right now. CHF, I just always keep it neutral. I haven't even looked at it, but I just always keep it neutral, so I'll keep it there. So yeah, right now I've got neutral AUD and NZD. All right. Yes, the numbers are coming in okay, but you need to see more. You need to see long, sustained periods of that data coming in. All right, you don't just see 1 week and be like, oh, it's strong. Now, with good numbers coming in, it doesn't mean that this week won't be strong, right? So some could argue. I mean, you might be sitting at home watching this, and you might be a day trader. So you're like, fuck, am I wrong? This guy here, Ryan, is saying that he's got AUD down as being neutral, but I've got it down as being strong this week because of this, that. So you're not wrong, and I'm not wrong, right? It's very important to remember that. We just have different perspectives and different outlooks on the way and method that we trade. So I'm looking at the big picture. I'm looking at data, and I'm like, where has it been sitting for like the last 3 months up to now? Has it been gradually increasing, or has it just been up 1 week, down 1 week, up the next, down the next, and just ranging? Data wise, or has it been consistently gradually coming down? So I'm looking at the whole bigger picture, right? Whereas if you're a day trader, you'll just be looking at what did it do last week and what is it potentially doing this week. That's all you're really looking at. So it may very well be strong this week based on day trading or based on scalping, right? It's very important to understand that and understand the context, because if you're a day trader and you're watching my content, which my information that I give out is predominantly based on swing trading, looking at the bigger picture. Okay, if it's been doing this for the last 3 months, where do we see it going for the next 3 months? You know what I mean? Then it's going to be very different, because I'll be like, right, it's neutral for now. I need to see another month's worth of good data to mean that my bias is correct, that it's going long or it's going short, But you're just looking at data that's happening right here, right now. That's it. You know what I mean? So it's very important to understand that, okay? However, pardon me, the information that I give based on these, like anything above 50 is bullish and anything below 50 is bearish and blah, 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 that's all relevant to you. So you just take that information. It's all the exact same information, but you just take it and you implement it into what that means for you if you're a scalp trader, day trader, or swing. All right. What am I doing now? CAD. Let's have a look at CAD. I'm going to go back a week. Just the wholesale sales up slightly. Oh, it's up good actually. It was at -2. Now it's been up, 2. So that's good actually. CPI month on month has dropped. Median CPI year on year has slightly increased, so that's okay. Trim CPI year on year is the same. Core CPI, common CPI, sorry, is the same but less than forecast. They thought it would increase, it hasn't. Core CPI month on month has decreased. Manufacturing sales has increased, but it's still shit. Housing starts have decreased very slightly. Foreign securities purchase, okay. Just remember, when it comes to Canadian dollar, it's very closely pegged to oil, right? So if oil's doing really shit, then and it's very cheap and it's still going short, then it normally has a bearish effect on the Canadian dollar, i.e. weakness, right? If oil's flying and we're having an oil boom, you normally find that the Canadian dollar starts to fly, okay, and reacts bullish. IPPI month on month, that's good. That's good. Shit. Poor and poor. So we've got mixed data. See, when it's like that, you're like, oh, but that's good, oh, but that's bad. All it is mixed data, guys, okay? Let's have a look at the rates, 275. So they're doing a decent job in getting inflation down, because all governments are supposed to try and get their inflation down to around 2%, right? And then once it hits 2%, they'll start raising inflation again, right? Which is good for the country slash economy, but not good for you when you live there. Because when they raise rates, it just means everything's more expensive, all right? CAD, what did I have CAD at last time? I had it at week. It is weak. That's the fucking thing. I'm gonna keep CAD at weak, guys, and again, it's predominantly based on oil. Now there is some good numbers there, right? So this is where I want to really explain it, especially if you're a day trader. Although I'm putting this down as weak, you might see some strength this week. So, for example, if we jump back to the trade I'm currently in, right? Let me just open this up. You might see strength this week, which look, it's going to go like that and start pulling this down, which is perfectly fine. I'm waiting for it to come back down, and then retest this zone, and then after that, bang, then we'll get the strength, and it will just start coming back up again. We'll get the weakness from CAD and the strength from US. All right, that's it. So, I mean, I don't give a shit when this starts coming down. I'm not like, oh, cut it. My stop loss is away down here. You know what I mean? I'm just going to leave it. If this market breaks away down and breaks past here, it means that I was just simply wrong, And all I'm going to do at that point, guys, is when it breaks down below, boom, it comes back up. Then I'm going to enter a sell, bang. That's it. Very, very simple. But that's what I'm basing it on. So I'm making mine weak. Now, like I said, you could, if oil increases and information this week increases and it looks good numbers, you might see some strength, okay? So for you as a day trader, it might be strong or it might be kind of neutral, but for me, over the bigger picture, there's nothing to tell me that the Canadian economy is strong yet, all right? Yes, there's some good numbers and it looks as if it's making a comeback, but it's just not strong for me yet, all right? I'm going to show you CHF, even though it's fucking pointless. Look, there's never anything here, right? So, when it comes to CHF, I pretty much never really look at it, because look, none of this matters. So how you trade CHF is actually quite different, right? You don't really trade it based on economic data, because it's really just flat all the time, okay? You trade CHF based on market sentiments. So if it's risk on or risk off sentiments, right? If CHF is a risk off currency, so if markets go to risk off, which means people aren't willing to take risk, like let's say America gets involved with fucking this Palestinian Israel stuff, or this Cambodia, Thailand stuff, and they heavily get involved in the war, then markets will go to be risk off, because they're like, fuck, we don't know what's going to happen here, this is crazy, blah, blah, blah. So markets go to risk off. Markets won't go to risk off when Thailand and Cambodia are fighting, just simply because nobody gives a shit, right? They're not big players in the world economics, so nobody cares. When it's risk off, it means people will move their money from riskier assets to non-riskier, safer assets. So that's CHF, NZD, Japanese yen, gold, silver, stuff like that. So that's how you would trade CHF. Okay, you don't really trade CHF based on it being strong or based on it being weak. All right. Let's go back. Now we're on to the euro. When we're covering euro, we look at everything. So we will look at Italy, we will look at Spain if it's like a month-on-month, year-on-year, and so on. But we don't really pay too much attention to them, right? The ones that we care about in the Eurozone is Germany and France, okay? Because they're the two biggest economies which actually have the kind of the volume, the size to make a difference in the euro, right? Spain and Italy just don't; they're too small. German's economist sentiment, good, bullish. Again, don't be fooled that that's red and thinking that it's bearish. Look, they forecast it to be 37.8. It was previously 35.3. It came in better than before, so that's bullish. But the reason why Forex Factory's made it red is because it didn't come in as high as forecasted, right? So don't get caught out with that, okay? If it's something's red, don't just say it's bearish. Have a look at the previous and see, has it increased or has it decreased? If it's increased, then it's fucking bullish, right? Apart from if it's one of these, obviously. So for example, let's say this one here, the German economic sentiment went from 47.5 to 48.9. Yes, it's an increase. However, it remains bearish. Okay, it means things are getting better, but as long as that remains below 50, it's bearish. All right, below 50, 50 and below is bearish. Above 50 is bullish. Okay, so it's important to make a note of that. Italian trade balance, good. Trade balance, euro, good. So trade balances, you either get a surplus or you get a deficit, right? So obviously when it doesn't have a minus sign next to it, like if it had one of these minus signs up here, then that means it's a deficit. What does that mean? That simply means that a country is importing more than it's exporting, i.e. it's spending more money than it's making, so it will go into a deficit, right, which is not good. If a country is like this and doesn't have a minus sign and it's continuing to grow, it means that they are exporting more than they are importing, i.e. they are making more money than they are spending, which is fucking good, right? So that's a surplus, not a deficit. Core CPI year on year, sticky. German PPI is a month on month, we don't really care. Current account is increasing, so that's good. Okay, last week, sorry, let's have a look. Consumer confidence, not good. Consumer climate, not good. Spanish unemployment rate is down, so that's good. But look, flash manufacturing, bearish, bullish. Okay, you don't even need to care about the rest of that has it increased or decreased. You can look at it if you want, but things are getting slightly better, but it's still bearish. Okay. However, if we look across here at central bank rates, euro right here have successfully got their inflation down to the 2% mark, right? It's 2.15, but it's, roughly 2% mark, which is fantastic because there hasn't been much disruption in the eurozone, right? So that is fucking fantastic. We could start to see, in time, inflation coming gradually back up now. So the eurozone is in a very good spot right now for potentially growing again, right? So keep an eye on that. That's probably why we're seeing things like this increasing. Look, increase, right? Because they've now got their inflation where all countries want to get their inflation, or all central banks want their inflation, I should say. Let's see what we've got. German retail sales this week, flash GDP, unemployment, CPI. We've got CPI this week, but it's only month on month. PMI. Okay, we've got some big ones this week that we want to see CPI on Friday as well. Let's see what happens. I had euro down as strong last week. I'm going to keep euro as strong. And now, I'm going to explain why here. Yes, this is all bearish, right? Bearish, bullish. So you'll be like, oh, why the fuck is he putting that as strong? It's to do with the central bank rates. It's now a very, very, I wouldn't say promising, but safe. It's now a very, very safe bet to invest in the eurozone. So this is why you're seeing these numbers increase, right, across the board, and you have been seeing them increase consistently for quite a while now. So that's why I'm keeping eurozone in strong. CPI and everything's fine. GDP and everything's been good. Yes, manufacturing, etc. has been slow, but it is increasing. Yes, these are still bearish, absolutely. However, this is a big one. Central bank rates are at 2%, so you're preempting for the future. What happens when central bank rates get to around the 2% mark? They will then slowly start to increase inflation again. Now, they will increase inflation once all these numbers start becoming bullish, right? So when these get above 50, 51.2, 50.9, blah, 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 that's when you'll get another month, and then they'll start to increase it, right? So right now when I'm saying it's strong, I'm kind of preempting it, okay, for future events, all right? Just bear that in mind, and then you have to work that with your method. GBP, we've only got three more to do, GBP, yen, and USD, guys, so bear with me. Let's have a look. Sorry, I can't stop yawning. Fucking knackered. BBC retail sales. Okay, that's increased. Fantastic. CPI increase. Bullish, 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 bullish. Bearish. Average earnings have decreased slightly. Climate count change. Bearish. Unemployment rate. Bearish. Okay, so that's what you call mixed data. When you've got good data and negative data, it's mixed data, right? Public sector net borrowing, not good. Flash manufacturing, bearish but increasing slightly. Bullish but decreasing slightly. Bearish, bearish, bearish. Yeah, not good. Not good. Oh, sorry, that's not bullish. Not bearish, that's slightly bullish. My apologies. I nearly fell into the trap that I've been saying to you about 3 times. Don't fall into the trap. Yeah, there's not really much final manufacturing this week. There's not much news this week. I didn't mark down GBP last week. Let's see. So I am going to put pound in neutral. Right. There will be certain pairs where this week it might turn out to be strong and so on, but I kind of know that in my mind. You know what I mean? Overall, I'd put it in neutral for now. Japanese yen and USD, guys. Then we are done on this, and we'll have a quick look at the pairs. All right, we'll see what trades are kind of lining up. Core machinery orders getting better, but still minus. Slightly better. Trade balance terrible. National core CPI terrible. Core CPI dropped, manufacturing dropped, core CPI year on year dropped, SPPI year on year dropped. You know, it's not good. I've been saying it for months. The Japanese yen's fucked. Yeah, so we've got decent news we want to see. They're still keeping the rates the same potentially. Unemployment. Yeah, we've got some news this week we want to see. But for me, Japanese yen, guys, is still weak. I'm not changing that. So now let's move on to USD. This is our last one. Okay, core CPI month on month increased. Again, don't put off for that. It's because they thought it was going to be 0.3. It came in less than expected. However, it's came in higher than before, right? So that is that's bullish, 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 bearish, bearish, bullish, 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 bearish. Right, so yeah, USD still a powerhouse. 2 weeks ago, let's see what we've got. Bearish, 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 bullish, bearish, bullish, bullish. Just didn't come in higher, just not as high as they thought, so it's bullish. Bearish and bearish. So it's very much mixed data. Very much mixed data, and it's because there's still so much uncertainty. You know, every time Trump fucking tweets, the market just goes nuts. He's still. I just saw a post today, and it was saying Trump's going to send a letter to the EU today about tariffs. You have to finalise tariffs. They still haven't even agreed a fucking tariff. You know, it's ridiculous. Good trades, but okay, what have we got this week? We've got jolts. We've got NFP this week. Okay, so we've got quite a big week this week for the USD. So this will potentially be a make or break week for this. You might see boom, and then it'll get to NFP, and it'll just go bang, fuck off, and it'll just start flying. All right. So I'm just going to hold that trade. I'm not going to close it. If it's a loss, it's a loss. You know. Yeah. So we've got a big week. I'm going to keep USD. We've got some weakness here, haven't we? Let's see what we've got. I mean, overall, I still think USD is strong, but it's a hard one because we do have a lot of mixed data. Let's have a quick look at the index, the Dixie, the DXY. So we could see some weakness here, just coming down slightly, down to this area here, which would tie in with what I was saying. Boom, boom, boom. You know. So, I think for now, the USD, I'm gonna keep it neutral. I had it neutral before last week, and I'm gonna keep it neutral. So just to summarise now, what I've got here is strong euro. I've only got euro down strong for now. Weak CAD, Japanese yen, and neutral is AUD, NZD, CHF, GBP, and USD. Now we're going to jump across here and have a look at what potential setups we've got. So I am on the weekly time frame, guys, because I am a swing trader. See that there? Wait, I'm going to zoom in, hold on. Right, see that? Small candle, large engulfing, breakaway, comes back, retest that zone, and then boom. So what you will find, right, see when you find these zones, mark up, I just do pin to pin on the small candle, right? What you will find is one of two things. It's either going to come up here, retest, boom, 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 and melt, right? Or it's going to come up here, break through this, right? It's going to blast through this, boom, boom, retest, reject, enter here, and away you go. Right? That's what you'll find will happen. I'm telling you right now. That is what will happen. So we just have to wait and see. What I'm going to do is put a little reminder in there. I will put it. Come on. Why can I not move it? I don't drive me nuts. I don't know why it's not letting me move that. Normally it does. I'll get rid of it and I'll put another one in. Right, bugger it. I don't know why it's not letting me do that. AUD CHF, there's really nothing there. It would be sells, but you can't sell from there, there's no value. AUD Japanese yen, nothing. AUD USD, yes. So you could mark up this area here, because that's a liquidity grab, look. Resistance, 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 liquidity grab. So this is the real zone. That's just the liquidity grab fake zone, right? So you could potentially just go like that and mark this up, right? And when it comes in, hits here, boom, and rejects. If it breaks through, it's just a liquidity grab, and then it goes. But this here, 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 this is the real value, right? This is where the real area of value is. That's not the real area of value. It was just what I explained, liquidity grab. Sorry if that was quiet there. Euro AUD, nothing. Euro CAD, nothing. Euro CHF, nothing. Euro Japanese yen, nothing. Nothing. It would definitely be buys, but it has to retest. It has to come back down. Maybe retest this zone here. It has to come back down. Boom, 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 bang, and away it goes. There's no There's no value to buy it up here. You're buying it when it's way overpriced. You need it to come back down. Now, what it could do is, it could see this pin here. It could retest this pin, you know. Well, there it is, look. If you mark it up, it is, look, bang, bang, away it goes. But, I mean, I wouldn't take it. That's pretty shit. I just wanted to show you that there. GBP AUD, nothing yet. There's a couple of areas. You can mark this up here. Small candle, large engulfing, once broken, becomes the new area of resistance. I'm going to put this in. Come on. Drives you nuts, doesn't it? Why is it not letting me change that? GBP CAD, nothing. GG, no, I just drew this so you guys can see it, but I actually hate it. It's so messy. I don't like it at all. There's nothing there. It needs to come back first, retest and go, or break through, retest and then go. GBP and nothing. Nothing. I mean, GBP USD. I'd probably say just test this area here. Inside the CAD. Nope. 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 I'm in that just now. I'm in buys. USD Japanese yen. Oil. That's just shit. Gold. I really want gold to at the very least retest here before I would enter. Silver needs to retest down here. Where is it? I don't know why. I'm sure. I'm positive I've marked all this up. I don't know why it's not shown. Copper. Yeah, nothing yet. That's pretty much it, guys. Alright, so that is it. If I enter anything, I'll tell you. I'm going to tell the guys in the group now as well that I've entered USD CAD. Let's just wait. So I might not tell them yet because I'll wait until this is a high impact week. So if they're not already in it, I'll just leave them out of it just now and we can enter it later on in the week. Alright, but if you find this content useful, feel free to jump on it. I have actually put together a massive A to Z course on trading. I'm just editing it all just now and I'm just going to sell it to the masses. It's not going to, normally when I sell the courses it's a couple of £100, and that's because it's not just like you watching a video, it's like the mentorship side, right, where you get to ask the questions. You can keep me on there for as long as you like. With the videos I've made, a lot of the information is going to be the same on there. However, I'm going to make it cheap for the masses, and there is of course no questions. Like, you can't ask me questions. There's no mentorship side to it. All right, so that's why it's super cheap compared to doing the course. All right, guys. Have a great week. Be careful. It's a spicy week for data, especially of USD, especially with all the stuff that's going on geopolitically. So just be aware of that. Don't make it make you afraid to take a trade. Just take a trade. Just manage your risk. Don't do crazy amounts of percentages. Don't have tight stop losses. Put the stop loss where it needs to fucking go. You know, if you're going to enter this, don't just put your stop loss fucking here. Put it above here, you know. Give yourself that breathing space. Put the stop loss where it needs to go. Don't be like, oh, if I put it here, then I'll make a bit more money. No, because what will happen is you get fucking stopped out and then it'll melt, right? Put the stop loss where it needs to go. Do not think about how much money you're going to make. Just focus on how much money you will lose if you have a losing trade. All right. I'm Ryan Mac. That's the trading, guys. Have a great week.